think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. I hope you all are doing all right, and I'm glad to be back with you all. I just want to jump into some new content, some new topics that have been emerging. So one thing is that Netflix stock has just plummeted, and so we're going to look at the charts and look at, is this a good investment now or whatnot? And we're also going to look at what Michael Burry has had to say about Tesla and comparing it to Netflix, right? So we all know that Tesla CEO Elon Musk loves Tesla and he pumps the stock a lot. And we know that Tesla tends to go up and it tends to be overvalued a lot of times. And so we have Michael Burry coming out and saying that Tesla is going to have its Netflix moment. So let's go ahead and get into it. Now, if you don't know who Michael Burry is the guy that was portrayed by Christian Bale on the movie The Big Short. And so he is famous for predicting the 2008 housing market crash. He actually bet against the banks during that time and made his investors a lot of money during that time because they actually decided to short the housing market. And a lot of people thought he was crazy during that time, but he saw a lot of trends that was developing in the housing market with adjustable rate mortgages and people not being able to afford those mortgages, and the Fed actually backing a lot of bad loans and buying junk bonds. And he saw that they were just giving out loans to just anyone, regardless if they could pay it or not. And so he decided to go against the grain. He decided to be the contrarian, and it paid off immensely. And now he is very well known in the investment community. And so we're going to jump into what he has to say, right? All right, so first, let's look at this Netflix stock. All right, so Netflix got plummeted, right? So we're looking at here, let's click these ads off real quick. I'm sorry, I didn't upgrade yet. So back in 2019, Netflix was about $251. So this was close to 3 years ago, or about 6 months for 3 years. And then if you go back to other periods in the stock, 2018, December, the stock was at $230. You go back to 2018, this is when the stock was at about $223. I mean, even down here, it's at about $185. So this is about close to 5 years ago, right? So Netflix ran up, and again, this is a growth stock, and I have told you all about how growth stocks work. When the Fed is easing money into the system, buying corporate bonds, buying junk bonds, buying government debt, financing deficits of the government because we have budget deficits in the trillions, then these stocks tend to run. People price in the growth early and they run into these stocks, and these stocks tend to go up to extreme levels. So if you look at the high on Netflix, it was at about $701 back on November 17th. So this is the all-time high of Netflix. So since November 17th, 2021, if you didn't sell that top, you have lost a lot of money, because now the low was 212. So it hit 212 today, and then it bounced back and it closed at 226. And then I guess after the market was 223. So this stock went from $700 to $212. Now, you have to ask yourself, okay, was that stock overvalued? Of course it was. I mean, a lot of stocks have charts that look like this, but when Netflix missed the earnings or lost subscribers, and they're talking about trouble with their competition and such, then you begin to see like, okay, people don't have as much confidence in this company as they did when the lockdowns were happening. People were in their home, Netflix subscriptions skyrocketed and everything. And so now it's like they're at a plateau, and some people may argue that they're declining. So Netflix just sold off like that. So now let's go ahead and go to Twitter, right? So this is my Twitter. If you ain't followed me yet, follow me at Money Level Show. I got to put that plug in there. I retweet a lot of good stuff. So this is a funny meme. It talks about Facebook getting murdered by the Grim Reaper. and then Netflix, and then next is Tesla. So we're going to see if that happens, right? And this is another fun fact. We talk about a lot about how the mainstream media does not have your best interests in mind. And so whenever they tell you to do something, you're technically supposed to run the opposite way. So we know that Jim Cramer is a part of CNBC. So let's see, January 3rd, 2022. This is tweeted by Jim Bianco, who's very well known in the crypto community. He tells you to buy Netflix at this price point. Since then, Netflix has declined 57%. So if you're listening to these guys these cookie cutter guys, these gurus and stuff on the mainstream media, you're going to lose money. They told you to buy here. They usually tell you to buy late. Netflix already ran up. Its high was in November of 2021, and he told you to buy in January, and then look at what happened to the stock. It plunged. So, and then you look at this other tweet, he talks about it here. So do not listen to the mainstream media for your financial advice, because you will get left holding the bag. All right. So we're going to look at what just happened with Netflix and how Michael Burry actually comes up with his comparison of Tesla and Netflix. So here's an article from Barron's. It says Tesla should take a cue from Netflix. Competition matters, right? Predictions about more competition for Tesla are a little like Elon Musk's predictions for full autonomous cars. The predictions are always around, but the reality never seems to arrive. Now, though, competition for the electric vehicle pioneer really is ramping up, and Tesla bulls should think hard about the impact, especially consider how the horse race in streaming has dragged down Netflix. So less people are subscribing to Netflix because of a lot of things. They're increasing prices. They're cracking down on password sharing. Some people say that they're pushing these political left ideas through their content, and so they don't want to see that. So there's a lot of things on Netflix that people aren't satisfied with, and they're losing subscriptions. It says shares of Netflix are in a deep, deep hole. The stock was off 37% in midday trading Wednesday after the company missed both Wall Street's and its own expectations for growth. And looking back, it's even uglier. Shares are down 63% year to date and down 68% from their November 52-week high. So it's down 68% from its November high, right? The company's market capitalization is now less than $100 billion, down from a peak of more than $300 billion. So looking at Netflix's competitors, you have Peacock, you have Paramount, Disney Plus, Hulu, Amazon Prime, you got Roku, you got all of these different competitors coming into the streaming market, and this is giving Netflix a challenge. This is challenging them. This is what capitalism is that other competitors come into the market and compete for market share. So when I talked about investing in tobacco stocks can no longer have any more competition coming into the marketplace. There's only a few companies that you can invest in, and there will only ever be a few companies that you can invest in because of Congress's laws that they have passed. So it's something to think about, right? So now let's go ahead and get into Michael Burry's text. So I had to pull up a photo of Michael Burry's text. I had retweeted it yesterday. He is known for tweeting and then taking his tweets down. He has had, I believe, the SEC and some other regulators come after him for some of his tweets and things that he tweets out. Because he seems to be very bearish on the market, the current market, and I don't know if they're talking about he's spreading fear or whatever. But they don't crack down on Elon like that. But I could see, I guess I could see their point or whatever. But this is what he says. So he says the competition came for Netflix, just like the competition is coming for Tesla, right? So the competition came from Netflix, just like the competition is coming for Tesla. So Tesla is not the only electric vehicle maker out here. They are not the only electric vehicle maker. And Netflix wasn't the only streaming company. So now you have companies coming in, competing for market share, and now you see the stocks are actually plunging. So you have companies coming in, competing for market share. And now you see the stock is actually plunging. So let's look at some things that are competitive. So you have Ford. Ford's been around for a long time, right? Years. They've stood the test of time. Their stock is still listed on the stock exchange. It's not a company I invest in, but it's been there for a while. They were some of the first car makers out there. So now they're into electric vehicles, right? And they have the all-electric F-150. So, the all-electric F-150, this is a truck they created, and it's all electric. So that is competition for Tesla, right? It's competition for Tesla. Let's look at BMW. BMW came out with an all-electric vehicle. It's called the i4 electric vehicle. So then you have these other versions that they have, which are coming out, and these are BMWs. So now you have these luxury cars, coming out, and they're coming out with all electric. I believe Porsche's getting into them, Volkswagen's getting into them. So Tesla has a lot of competition that is actually coming for them, and they're going to be taking up market share. Some people are not too fond of Tesla. Some people are BMW guys. Some people are Ford guys. Some people are Chevy guys, or Chevy guys and girls or whatever. And they actually love those brands. And so when those brands are coming out and they want to get electric vehicles, they're actually going for those cars. So I think Michael Burry has a point with what he's saying, and we'll see what happens in the future. Is Tesla going to stand the test of time? That's the question. Let's look at Tesla stock. Tesla came out and blew out everyone, right? It blew out everyone. Every car stock out there, Tesla has blown out, right? Look at this. It was at 1,242, for a while. Then, you look at other companies like Toyota. Toyota's been around for a while, right? So let's look at Toyota. See if I can find an actual ticker symbol. And let's see, Toyota Motor Company, right? Toyota's been at, $213? Tesla's at $1,200? Now, these companies have been around for a long time, and I just don't think that Tesla's going to live in this space without having this amount of competition. Even at Biden's State of the Union, he promoted companies like Intel and I think Volkswagen and some other companies. He did not mention Tesla. And so, these other car companies are coming for Tesla, and they're competing for market share. And the crazy thing about it is they're all going to need the resources that I've been telling you all to invest in. Lithium stocks, these metals, palladium, platinum, hydrogen, all those different things, they are going to need those commodities, and those commodities are not plentiful. So we're going to see how this plays out. Leave your comments down below. What do you think is going to happen with Tesla stock? Do you think Michael Burry is correct in his analysis and his assessment of Tesla? I'd love to hear from y'all. Be sure to hit the like button and subscribe. And I want to thank you all for joining me today. All right, peace.